The name Aston Martin practically drips with prestige. By many, it is regarded Britain's answer to Ferrari, luxurious yet high-performing and possessed of a legendary racing heritage. Some of its cars are considered icons. The DB5, released in the 1960s, is widely regarded as one of the most beautiful cars ever produced.
Aston Martin had a lot of success in racing, particularly at Le Mans, the cars were always more what we call grand touring cars. They could go long distances at high speeds, in great comfort, as opposed to, being the car that you necessarily want to take to the track.
It seems fitting that the brand ended up becoming the preferred ride of that famous British spy. It has ridden both its mythical fame and real-world reputation into the 21st century, and has even in recent decades been reinvigorated by passionate leaders. But again and again throughout its long history, Aston Martin has fallen on some very hard financial times.
When Aston Martin Lagonda went public in 2018, shares cost nearly $25.
In May of 2020, they had fallen to around 50 cents. CEO Andy Palmer left the company that same month. Aston Martin released its first ever sport utility vehicle, the DBX, for the 2021 model year. In doing so, it is following the lead of luxury car makers such as Porsche and Lamborghini. But how much can the DBX contribute to Aston Martin's bottom line? With the coronavirus and its resulting economic fallout battering the automotive sector, it is a tough time for even a legendary name to turn itself around. Aston Martin was founded in 1913 in London, England by Lionel Martin, a race car driver, and Robert Bamford, an engineer. Martin won a race called the Aston Clinton Hill Climb in a car the two built together. The victory gave the company its name, Aston for the race, Martin for the driver. The company made its international racing debut in 1922 in the French Grand Prix. They then began breaking world records. Later, Aston Martin won the Biennial Cup at Le Mans, France in 1932. The industrialist David Brown bought the company in 1947, leading to a kind of golden age for Aston Martin.
Key thing is to recognise really that David Brown saved the company. Without his involvement in 1947, the company would have gone bankrupt again, and it wouldn't have survived into the modern era. So it was Brown really that. I think Brown was probably the first person that came into Aston Martin, and as well as having an enthusiasm, and he was a huge enthusiast for the cars and the racing that came later, and for what Aston Martin did. He was also a businessman.
During that time, it began rolling out its famed DB-badged cars, grew its reputation in racing, and purchased Lagonda, a brand of luxury vehicles. DB cars began placing in races at Le Mans in the early 1950s. But the DB5, which debuted in 1963, was a revolutionary vehicle for Aston Martin. The DB5 became an international icon. To many, it is perhaps best known as the car James Bond drove in the movie Goldfinger.
It was, the most popular film, the biggest blockbuster film ever at that stage, so it was a huge deal. And so the Aston Martin DB5, because it was such a sort of integral part of the film and almost was a character in the film, it suddenly propelled Aston Martin into the spotlight really for the first time.
Aston Martin continued to be a distinctly British icon over the next 3 decades, but it also changed owners several times and repeatedly faced financial troubles. The company acquired its current full name, Aston Martin Lagonda, in 1975 after it was bought by an international group of investors hailing from Britain, Canada, and the United States. It was acquired by Ford Motor Company in 1987 as part of a push by the Detroit automaker into high-end brands with legendary names, such as Jaguar and Land Rover. The Blue Oval sold its stake in 2007 as it fell on its own hard times, and Aston Martin was scooped up by a group of investors, including a racing executive named David Richards and some Kuwaiti investment firms. A few more ownership changes took place in the next several years. In 2012, an Italian private equity firm named Invest Industrial bought a 37.5% stake, and then Daimler took up a small stake in the firm shortly after.
gone through a range of various investors over the years, but none that really seem to have the long-term commitment and the resources to fund what Aston Martin needed in order to transform itself.
Throughout many of these years, from 2000 to 2013, the company was headed by CEO Ulrich Bez, a German who was regarded as a transformative leader. He had been appointed while Ford owned the company and stayed on even as Aston Martin changed hands. Bez is credited with overseeing much of the work that led Aston Martin into a new era that drew comparisons with the David Brown years. As an advisor at Ford, Bez convinced the automaker to invest in Aston Martin. The company unveiled the Vanquish at the 2001 Geneva Auto Show. Under Bez, Aston Martin designed a vehicle that did not share any visible parts with Ford cars, helping to give the impression of a car that was designed to be unique to the brand from the ground up, rather than just a high-end Ford with a legendary nameplate. The Vanquish helped get Aston Martin back into the Bond films, appearing in Die Another Day in 2002. During his long tenure as chairman and CEO, Bez grew Aston Martin's sales from just a few hundred units a year to thousands. He also oversaw the successful move of the company's headquarters from Newport Pagnell to a brand new manufacturing facility in Gaydon, England. He stepped down in 2013 to take on an ambassadorial role. Then, in 2014, the company hired Andy Palmer, the CEO of Nissan Motor. Like Bez, Palmer had engineering chops. He was trained as one and had started his career as an apprentice on a car assembly line. He seemed like a perfect fit for Aston Martin. Palmer had even grown up around Gaydon, England, where the new factory was located.
But Palmer's tenure was marked by troubles. The company undertook an initial public offering in 2018 at a float price just above $24. Shares subsequently tanked. This has been a disappointing year for Aston Martin Lagonda, wrote company chair Penny Hughes in the automaker's 2019 annual report.
Revenue had grown from about $779.5 million in 2015 to a peak of about $1.4 billion in 2018, but sales fell to about $1.3 billion the following year.
After years of growing sales, the company sold 5,862 units, a 9% decline from the 6,441 it had sold the previous year.
The declines in profit and sales left Aston Martin needing cash. However, at least some analysts say Palmer inherited a lot of troubles. First of all, going it alone as a highly specialized, high-end automaker is remarkably difficult.
The struggles that Aston Martin's in right now, and has been for the last year or so, a lot of that is based on the decisions that were made before Palmer's arrival. And in some respects, Palmer is almost a scapegoat for the troubles they're having right now.
Most high-end brands, such as Porsche, Lamborghini, Rolls-Royce, and Bentley, are either owned by or supported in some way by much larger automakers. Aston Martin is something of an exception.
Aston Martin didn't have that advantage of being sold to a big automaker that could put the money into the brand. And so, in order to develop a range of vehicles, that's very expensive. And that's also been a drain on Aston Martin's resources.
The second problem for Aston Martin is that while it had many great cars, it had no sport utility vehicle. Purists balk at the idea of Porsche, Lamborghini, or even Bentley and Rolls-Royce SUVs, but these models have become great moneymakers for brands. Porsche was really the first among these companies to risk controversy by releasing a sport utility. In its case, the first being the Cayenne. Now, sales of the Porsche Cayenne and the smaller Macan outnumber sales of all other vehicles combined.
For Aston Martin, they are just now launching their first SUV, almost 2 decades after Porsche launched the Cayenne. Even Lamborghini has an SUV now. So I think that hurt Aston Martin over the last several years. The vehicles they had, while they were excellent vehicles, they're not the vehicles that most consumers seem to want to drive right now.
Aston Martin is, of course, faced with the added challenge of having to right its ship amid the coronavirus pandemic, which has dealt a blow to the entire auto industry. In 2020, the Canadian fashion mogul Lawrence Stroll led an investor group that took a significant stake in the car maker. When it delivered results for the first half of 2020, the company said more than 90% of its global dealership network was open, though it did expect the pandemic to suppress demand for sports cars. It also expected its production facility in Gaydon, England, to resume business at the end of August, which is later than it had planned. In the first half of 2020, it shuffled its executive team, appointing a new CEO and a new CFO. Aston Martin has begun to deliver the DBX SUV, which management says is critical to a successful future. Industry watchers say the company is, of course, behind nearly everyone else.
But they need to get something going on the electrification side in order to be able to stay in the marketplace in Europe, in particular, where the European regulations on CO2 emissions are getting substantially stricter this year. One of the challenges for a small automaker is if they don't have some more fuel efficient vehicles to offer, to offset the high fuel consumption of cars like the ones that Aston Martin sells today, they're facing some pretty significant fines.
And Aston Martin appears to be cozying up to Mercedes. The newly appointed CEO Tobias Moers previously ran Mercedes-AMG, the German automaker's in-house performance tuning shop. Like Aston Martin, Mercedes also has a very strong presence in racing. It has been winning Formula One races in recent years, to the chagrin of longtime leader Ferrari. Mercedes is also first and foremost a luxury brand, and it has some very high-end models that rival Aston Martin's in price and features. Some auto industry analysts expect Aston Martin to strengthen its ties with Mercedes-Benz in the future, since going it alone can be so difficult.
It's in a global auto market as competitive as this one is. You've got constant evolution and constant progress in technology, and it takes money to keep up. And Aston Martin's undeniably struggled. People who evaluate the cars have seen them, they've always had great looking cars. They've always offered plenty of performance, but things like user interfaces inside and technology, safety technology and connected car technology, things that everyone expects in a modern car, they've struggled with. If you're going to borrow from another company to get some of your electronics and even some of your drivetrain components, Mercedes-Benz is a good source.
The company plans to re-establish itself in the prestigious global Formula One racing series in 2021. Stroll owns the Racing Point F1 team, which Aston Martin will take over. The automaker has sponsored the Red Bull F1 racing team in the past, but 2021 will mark its full return as a manufacturer after an absence of about 60 years. That racing credibility is vital for the reputation of a company trying to sell high-end cars. Aston Martin declined to comment to CNBC on its present situation or its plans. Technology is changing the auto market at an incredibly rapid pace. Pricey cars are profitable for makers, but competition is stiff, and Aston Martin cannot rest on its illustrious history and pedigree. It needs to keep showing buyers that it is living up to its storied name.